The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. It's Paul here. Here we are in session 27 of the Admiral Markets webinar series of Mastering the 4 M's of Trading. It's Monday, the 18th of February. My name is Paul Wallace. I'm your guide through this interesting webinar series. And as always, before we kick into the main content of the session, we'll always begin with just a quick risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk but is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risks involved in trading. This presentation and the accompanying video is for information and educational purposes only. Online educational materials are developed by Admiral Markets and distributed by Admiral Markets Group investment firms for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. As of August 2018, the regulation within the European Union differs for retail clients and professional clients. In our presentation, we use demo trading accounts where all clients could still use a high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional trading terms. Retail clients benefit from unlimited negative balance protection. Professional clients at Admiral Markets UK receive a compensation of account deficits with the maximum payout of £50,000 sterling, as per our negative balance protection policy. There are many good reasons to trade with Admiral Markets. A couple of those reasons are, as you can see there, for two of the most popular trading instruments, the DAX 30 and the Euro Dollar. It offers very competitive spreads during normal market hours. They also offer both MT4 and MT5 MetaTrader platforms with the additional Admiral Markets Supreme Edition. If you have any questions, then please don't hesitate to get in touch with your account representative. And it should be, you should be aware that Admiral Markets is a global brokerage that is regulated and authorized in many locations across the globe. And if you speak to your account representative, they'll be happy to guide you towards the most suitable environment for your own trading needs. So as always, ladies and gentlemen, I start with setting our expectations for these sessions. For me, it's about educating you about the 4 M's of trading so you can go away and begin to analyze any market and be ready to trade it, and help you raise your own self-awareness about managing risk and about managing yourself. For yourselves, ladies and gentlemen, I appreciate we do have a broad range of experience in the room, and I'm under a time limitation of 45 minutes. So that sometimes limits the depth that I can go into in certain topics. So we'll always try and focus on tools that you can use tomorrow in your own trading. We want you to be able to take away all of the sort of good takeaways from these sessions and basically build it into developing your own trading skills and your own trading business. So, if you're completely new to joining us for the series, then Mastering the 4 M's of Trading was really about me educating you about what those 4 M's are: the markets, method, money, and myself, and about being able to help you identify where and how you operate within those 4 M's yourself, help you raise your levels of education and self-awareness so that you too can actually master those 4 M's of trading. Because the good traders that I have seen over the last sort of 10 to 15 years, they tend to actually sort of manage those 4 M's very, very well indeed. That's what allows them to be the best traders that they possibly can be. And that allows you the opportunity to do the same within your own trading as you grow, develop, and evolve as a trader. So, as I said, for people who are just joining us for the first session, well, you'll find that all of the previous sessions are in the Admiral Markets webinar archive, which can be found on the Admiral Markets YouTube channel or on the Admiral Markets Group Facebook page. And within that, what we've talked about is having sort of 10 simple steps that, as a trader, You can just follow through that because that allows you to start to build good habits, allows you to demonstrate good discipline and consistency in your own trading. And so the very earlier sessions that we touched on we're going through the first simple 5 steps of that 10-step plan, namely step 1, define levels of support and resistance. Doesn't really matter what kind of your instrument you're trading or what your time frame might be. That's what should be doing, is define levels of support and resistance. Step 2, when you look at that chart, see if there is a trend in place. Step 3, look to see how price reacts at key support and resistance levels. Step 4 was about looking for certain price action signals to use them as triggers at certain support and resistance levels. And step 5 was about being able to see the bigger picture, namely, were they part of a bigger chart pattern. Then, what we've been focusing on this year, ladies and gentlemen, is doing the sort of call it the back 5, the sort of 6 to 10. So, we talked about step 6. We did a good few weeks on risk in terms of how you need to be able to define your risk, accept it, and stick to it. A few weeks ago, we moved across to step 7, where I was looking at reward, the other side of the coin, and working about whether we utilize targets or whether we have a trailing profit stop. But the important thing being about knowing your exit before your trade is placed. And then last week, what we did is we touched on step 8, which was about record, about making sure that you keep scrupulous records. Now, as always, those of you who've joined me before, we know that the first part of the session, I try to do quick recaps on what we've covered over the last few weeks, because I appreciate that sometimes people miss an odd session. Also, the fact that if you're a new trader, hearing me explain these steps repetitively time and time again is what actually makes it more of a habit for yourself, and that's where I want you to get to. So last week we did step 8. We're going to do a quick recap of 6, 7, 8, and then we're going to move on to step 9 for today later on in this particular session. So if you remember, we talked about risk, we talked about reward. We also touched on, understanding risk versus reward, okay? Understanding the actual risk-reward ratio. And I talked about how for my own trading, I talk about, what I talk about is asymmetric reward to risk trades. What does that mean? Is because it means that, let's say for every 100 euros I would risk on a trade, I'm looking to generate on my profitable trades 200, 300, 400, 500, euros. I'm looking to have a bigger reward for the risk that I take in my trades. And one of the reasons that I'm able to trade like that is because it helps me, because it removes the need for me to be right on every single one of my trades. And I find that for myself, well, it just takes the pressure off my shoulders. It just allows me to take the trade knowing that, I don't actually need to be right in every trade to do well in my trading business. And we talked very quickly about understanding that, over the last couple of weeks, all right, just recognizing, the difference, with regards to the risk to reward ratio, hit down here on the left-hand side, where, you've got 1 to 1. Well, effectively, your hit rate has to be pretty much, 51% and above, all right, for you to be profitable. Whereas actually, if your reward to risk ratio is just, let's say, 4 to 1, well, really, anything above 30% hit rate, a 30% strike rate in terms of how often your trades win, well, then anything above 30% actually, and you are into a profitable area of your business. And so, as I said, that's asymmetric reward to risk ratio, and that's the way I particularly like to operate. New traders sometimes find that very difficult, but the easier you are at being able to sort of be comfortable with being wrong, the quicker your progression to trading profits will be. And just as I said, sometimes asymmetric reward to risk trades are not always easy for new traders to follow, and what you find is actually new traders, they have a need to be right more than a need to be profitable, which might sound a bit strange. It might sound a bit, as if that's not just completely wrong, but actually you will find that people need to be right more than they need to be profitable. Hence why they're always driven towards wanting 80, 90, 95, 98% hit rates on their trades. But actually, as you start to understand the reward to risk ratio, well, then you realize that you can actually be right 98% time, but actually still lose money if you have a very, very poor reward to risk ratio on your trades. So I appreciate asymmetric reward to risk is not always easy to jump into for a trader. But what I'm saying is that as you develop and evolve as a trader, the quicker you're able to become more comfortable with being asymmetric reward to risk, the better you'll be able to operate. And the only way to do it is to get out and do it, to take the trades. So then last week we talked about step 8 and sort of, about recording, all right, if you remember that, okay? And, we talked, the sort of the premise for the session was about, is it possible that your trading results for that session could be determined before you even switch on your computer? Now, I know some people who may be seeing this for the first time today may be thinking, well, that's not a chance, Paul, no way whatsoever. Other people who maybe have a little bit of trading experience will actually recognize that it is indeed quite possible for your trade results to be determined before you even switch on your computer. And we talked a little bit about that and what that meant as it set up, and in particular we talked about where traders' focus goes, all right, and we looked at where an amateur trader's focus goes. Well, an amateur trader's focus tends to go on the method and the markets. That's what we do in methods in particular. Whenever I see new traders, or if I'm ever presenting about new traders, they're always wanting to ask, where do I buy and where do I sell? That's what they're acutely keen to understand and to know. And so that's where their focus goes. Okay, and actually, in terms of focusing on the money and the managing myself, it's actually a very, very small part because they don't realize the importance of it. Whereas actually, when we look at a professional trader's focus, we can see that it's almost exactly the opposite. In that, for most professional traders, it's only maybe somewhere between 5 to 10% that they're focusing on the method, because they normally have a few simple setups that they have traded until they know that they have a proper edge with that, and actually they just don't really change it. They just they might have a little kit bag of a few setups, but they're basically just trading that and not really sort of just trying to find new trading methods. They're just honing the ones that they have. And in terms of markets, yes, they want to understand what the markets, whether it's trending or whether it's range bound, what kind of environment it's in. But they're not spending as much time on that as other traders would do. The new traders would focus on. Then they're looking at money management. Okay, money management, we talked about it in terms of risk management on step 6. Risk management is actually it's one of the simpler topics to grasp, but it can be one of the harder topics for people to maintain. Whereas professional traders focus, they are able to manage risk very, very well. And most of the time, and most of their energy goes on managing themselves. So we talked about how Paul Tudor Jones, put up that quote about, how profits come from happiness, not the other way around. So now he spends most of his days trying to make himself as happy as possible. And that's, that comes back to that initial question that we set, in that, can your results be predetermined before you even switch your computer on? And that's what we talked about, and but then yes, actually they can be. Okay, because simply just focusing on your trading method is not enough as you're going to grow and evolve and develop as a trader. Trading is a performance activity, right? It's not a Monday to Friday 9 to 5 40-hour week job, right? It's a performance activity. So to be able to perform, you get paid to perform. You need to develop a performance mindset, so to enable you to operate effectively. And that mindset will give you the sort of, let's sort of call it the mental toughness or the resilience, maybe, to be able to handle whatever happens in the market. And this is all the major part of that 4th M, about managing myself, all right? And what you'll find is that new traders, amateur traders, they don't really understand the importance of it. But as you trade more and more, and as you around other, let's say, professional traders, well, then actually you start to realize how crucially important it is, okay, in terms of the managing myself and understanding that. And understanding that, as Paul Tudor Jones said, profits come from happiness, not the other way round. And so it is about being able to manage yourself, make sure that you're keeping yourself in a good position, good mentally, physically, and emotionally, so that you're able to operate at the best of your abilities. So, what we talked about was, well, how can you do that? What sort of things can you do to sort of help yourself with that? And what might sound a little bit weird is me sort of saying, well, actually don't really focus on trading that much. Focus on planning, okay? But focus your time and energy on planning for profit. You actually want to become a profit planner. That's what you're looking for, right? And so what we mean by that is, well, when you're looking at a chart, all right, and if the direction's not clear, then let price lead the way. Very often I find new traders, they just want to jump on board and trade everything, okay? But actually it's not always the smartest move to make. You wouldn't look to fly a plane if there was zero visibility. You wouldn't want to scuba dive if there was zero visibility. So if you have zero visibility of what's going on in the market, well then why would you particularly wish to trade? All right, it's about planning for profits. That's what it is. It's not about just mashing the keys, buying and selling, hitting the buy and sell button. It's about planning for profit. It's about being able to look at the markets, follow the 10 steps that we've been going through, so that you're in a very quick way to be able to understand what that market environment is and whether it actually suits the trading method that you're utilizing. And if so, well then you're able to execute the opportunities when they come your way. If they're not, well then you don't touch it. You sit on your hands, okay? You actually sort of keep your finger off the trigger, okay? Because that's it's your idea, is it's your trading business. You're actually operating and looking to sort of plan for profit. So that's what you're looking to. That's how you're looking to trade and operate. So we talked about when you start becoming like a profit planner, all right, that actually you start to logically planning for your profit opportunities. What happens is that your likelihood of making, let's say, kind of stupid impulsive trades, that starts to descend, all right, in terms of the frequency of that. You also have more control of your trades because you're planning trades, you're planning your trades, you're trading your plan, you're managing your risk. As you do that, well, then you start to develop more consistency in your in your trading. And as you do that, it helps you become more confident in yourself. It builds self-belief, it builds self-confidence in yourself as a trader. And that experience, starts to make you a better trader. Now, unfortunately, that doesn't happen overnight. I can't. There is no sort of magic lotion that I can sell you that you can rub yourself in that turns you into that overnight. But actually, by becoming that profit planner, focusing on just making your plan, focusing on following these 10 steps, all right, just avoiding making silly impulsive trades, all right, sort of just controlling your trading in the sense that you're just you have a plan about what you're looking to happen and occur. And if the market doesn't look as if it's as if it's operating in the way you want it to, well then you sit on your hands and wait until it does, or you go and find a different market to look at. And as you do that, as I say, that's what builds consistency, it builds confidence, builds self-belief, and that overall just adds to a much better experience for you as a trader. So we talked about how could we do that? What can we actually literally do to help ourselves with that? And talked about this great quote from Dr. Alexander Elder in his book "Come Into My Trading Room." Show me a trader with good records, and I'll show you a good trader. And it's an absolutely it's a great quote, and it's absolutely I can completely back it 100%. Okay, all of the good traders that I have either traded alongside, or I have worked with, or I have sort of known throughout my own trading journey, they have all been very, very good at keeping records. Okay, they've all been very good at keeping records. So show me a trader with good records, and I'll show you a good trader. And it is absolutely true, and it's something that I want you to. If you're completely new to trading, I want you to sort of take that on board yourself. Okay, just going forward from today. So if you remember, we talked about, in much more depth about, sort of records that we need to look to try and keep on top of. So, looking at a trader spreadsheet, a trade journal, an equity curve, and also a grade card. We said we focus on spreadsheet, journal, and grade card. Really, it's we talked about spreadsheet Excel. It's not very difficult. And we talked through I think in the last week we talked through the actual bits of data that you need to sort of be keeping aware of. We also talked about the that actually these days there are actually some tools out there. There's some actually very commercial and professional trading spreadsheets, trading journals that you can keep, that will either download the data from your MetaTrader platform, but that actually even just being able to sort of keep simple records of Excel of your trading is it's crucially important. We also talked about having a grade card, okay? And interestingly, we talked about making sure that you grade your trades not only for performance but also for execution. It's quite easy to sort of grade it for performance scoring, okay, for a trade, whether it hit your target, whether it hit stop loss. But actually, what we want to see is Also, you grading yourself for execution. All right, execution, and the reason being for that is that is something that you can control. Okay, once a trade is triggered, anything can happen. Right, that's one of the sort of fundamental underlying beliefs of a trader, and they're based from the Mark Douglas book, Trading in the Zone. But in terms of your execution, all right, no one forces you to pull the trigger on a trade. All right, executing your plan is solely within your control, and actually, what we're looking for, and what I like to see from traders is that they have a good score on their execution as they go forward. And also, we talked about a trade journal. Okay, whereas the spreadsheet will actually take in the actual data. Okay, the sort of the data points. A trade journal is about filling one in for your trade. It captures all the details, but also your narrative, your feelings. All right, on about that particular trade. Did you feel confident about that trade? Were you nervous about that trade? Okay, what were your feelings as the trade went on? And also, as we said, just very importantly, you want to talk about, well, what did I learn from that trade? Okay, it's crucially important for you to try and learn something from every trade. I myself, I try and put 3 things down that I learned from that trade. And what you start to do as we go on to what we're going to cover later on in this particular session, you'll realize that data there in itself is a little bit of a gold mine for yourself. Okay, it'll enable you to sort of develop your own trading skills and help you become the best possible trader that you can. So there you go. We sort of just, as I said, always like do a little bit of a quick recap on what we've covered over the last few weeks, because the more you hear it, the more it sinks in, the more it becomes your standard way of operating, and that's what I want. So if we talked last week about step 8 about recording, okay, and that's what we want to do. You're making sure that you're recording the data. Well, step 9 is about reviewing the data. Okay, it's about how do we go about review. Excuse me. Well, what we talk about is that, I tell traders that, at the end of every day, you should be reviewing your trades. Okay, what trades did you take today? Make sure that your trading spreadsheet's up to date. Make sure your trade journal's complete. Make sure that you've got, your grade card for that trade is complete as well. So you want to be able to, review that at the end of every day, and also at the end of every week, and at the end of every month. You see, the more times you review those trades, the more you'll learn from it, the more the actual lessons that you take from them will sink in. Okay, they will start to create the let's say the grooves in your neural pathways that start to sort of reaffirm the good habits and the good behaviors that you want to see within your trading. And you can also use the data within your Excel spreadsheet to work out some particular KPIs, okay, key performance indicators. In particular, just simple ones to begin with are things like the win-loss ratio, all right? How often do you win as opposed to how often do you lose in your trades? You can also work out, remember, risk to reward, all right? What is the risk to reward ratio on your trades? Remember a few slides back, we were talking about I'm always aiming for asymmetric reward to risk ratios. That's the way I'm looking at it. And once you start to understand your win-loss ratio and you start to understand your risk to reward ratio, well, then you're in a position to understand whether how you're dealing in terms of expectancy. Do you have positive expectancy, namely that you'll know that you can effectively deliver over a sample size over trades, you'll actually deliver profit, or do you have negative expectancy in terms of that particular trading method isn't working and it's going to lose you money and needs to be reviewed? But also, what you'll see is, interestingly, is that as you begin keeping all this data, it allows you to understand what developing trends you have within yourself. It might sound a bit strange, but you have to remember, for most people, okay, they're going to be trend following traders and they're looking to identify trends. But what you'll also do is you'll start to identify trends within yourself. Okay, and that becomes, well, certainly for me, that becomes quite fascinating to understand the sort of trends that you see within your own way of trading. Because once you start to do that, well, then you're starting to learn more about yourself. You're doing that element of raising your own self-awareness about how you're trading, and that just becomes crucially more and more important and more helpful to you in helping you sort of hone your own approach. So in terms of key performance indicators, there's lots of them that you can keep. There really are lots of them, but some very simple ones, about making sure understanding your How many what? How many trades have you placed over that, whether it be certain day, week, month, quarters? What were the number and or the percentage of your winners to losers? All right, trying to understand the size of what your average winner is and what the size of your average losing trade is as well. Another thing is interesting and useful to note is what was your average time in your trade. Now people might understand that or take a look at that and think, well, how is that going to help me, Paul? What does that develop? What does that really help? Well, what you can quite often find is that you might find that you're in losing trades much longer than you are in winning trades. So it might well be that you're in winning trades not as long, because actually the trade triggers, hit your target and you're out. Whereas actually other trades, you might find that the losing trades, they linger, they go on because they just knock about, where your entry point is. They just sort of schneebel along a bit, not really doing anything effective. And what you'll realize is that, whilst you have that financial capital there on the line, you also have your emotional capital. Okay. And if a trade is just pilfering along, okay, not really sort of doing anything, well, then that basically, that might be giving you data on about how quickly you need to kill your trades, and whether you need to include something even like a time stop on your trade, just as much as a physical one. You can also look at, what's your numbers of longs versus shorts. I know for myself, I have a bias to the short side. Probably about 2/3 of my trades are shorts, okay, versus longs. I'm actually, I openly admit, I'm actually not any better as a short trader in terms of my profitability isn't any better when I look at the data. But what I just find is that I tend to find I see short opportunities set up much easier than I do of long ones. So it's about understanding that, okay? It's about trying, as I said, understand the developing trends within myself. And then, as I said, once you've got all this data, you're in a position to start to work out whether you're in a position of positive expectancy, which is your percentage of your winners times your average winner over percentage of losers times your average loser. Okay, and that will give you a figure and a number, and you'll be very quick to sort of see whether you actually have positive expectancy, that you can actually expect to have a positive and profitable outcome. As your sample size of trades grows, and if you're not there, well then you're in a position that you need to do some work on reviewing and rethinking how you approach the markets in that direction. So those are just some useful KPIs you can do, and personally for me, I actually find it fascinating. I actually really find it fascinating just having a look at the data and starting to see what my trading was like, where I was at my most profitable, where I was at my most challenged. Because the more you learn about it, the more you're able to sort of amend your approach to sort of help you make a better trader going forward. So, this is every month. What I do is, I kind of write a little report. Okay, nothing doesn't have to be big. You can write as much as you want, but I have a little one pager. Okay, and that I just write it almost as if I was having to do a report to like the board of directors of my business, which in a way I have to. I think I've got a slide here. This is from one of the first hedge funds that I worked for, many years ago now, right? And that particular kind of month and stuff, I had a 70% win ratio. 38% of my trades were reversals, 62% of them were trend following. Okay, at that time, so really 2/3 were trend following, a third of them were reversals. I talk about it quite a lot. Is that I discovered that in that particular case, 50% of my losing trades were on Fridays. Okay, and I often talk about that and how it was only by actually going through the data and actually being able to keep good records that I started to realize that. And what I realized is that because I was starting trading on a Sunday evening when the Pacific markets open, simply by doing long days working at a hedge fund, is that by Fridays, I was actually just mentally, I was just burnt out. I was just burnt out from just long days of trading. And so what actually happened is, once I was able to understand that, I was able to speak to the fund, show them that data. And actually what happened was that I didn't even come into the office on Friday. Friday was like an admin day. I didn't trade on Fridays just because, just clearly you could see that clearly you could see that, by the end of the week I was just burnt out, and I need to rest and recharge. And as I said, I didn't even go into the office, because if you're in the office, then the temptation to trade would be there. So I would effectively just go and sit and do my admin work and make sure my paperwork was up to date, and just stay out off the trading floor. But all of that came from, actually basically understanding, keeping good records, and then being able to review the data. You can see there, out of 5, my performance score was 3.5 out of 5, which is not too bad. But what actually is more important is my average execution score was 4.95 out of 5. Okay, that's where I want traders to be. Okay, that's where I want traders to be. That's the thing. Your performance score, okay, is nice, but you don't have as much control over it as you'd like. But if your average execution score is very low, that if I'm your let's call it, if I'm your trade manager, if I'm your trading manager, well then me and you are going to have a bit of a bit of a frank conversation. Okay, your execution scores should always be as high as possible. That's the sign of good, consistent, disciplined trading, and that's what I'm trying to drive you towards here, ladies and gentlemen. So, once you have done it, let's say as an overall for your overall trading business, well, then you're in a position to start, to basically to start doing that for, to start doing it by particular strategy or tactic, which are your methods are you using. So this is a particular one. It was an intraday scalping one, right? For that month, it was 44 trades. Okay, it generated 266 total of net points. Okay, positive. It had a 73% win ratio and a reward to risk ratio of 1 to 1. So, as I said, I personally prefer to have asymmetric reward to risk ratios. Okay. But, in this particular case, that was just an intraday scalping method that we utilized at that time in the fund. And that was a nice month. Okay. There was a good win ratio, right? It's a high win ratio, but also the reward to risk ratio was at least 1 to 1. Okay. So that kind of help that made that makes a good that makes a good difference. You can, if you've got a win ratio of that high of 73%, well then having a 1 to 1 risk to reward ratio is feasible. You actually have you have a profitable trading strategy. So, very often, just to start to finish up, very often, they talk about, their kind of standard commentary about how it takes 10,000 hours or 7 years to become an expert in something. There's lots of people who would maybe challenge that, but the reality is that to become anything, to become good at anything, is going to take a good few years, and that doesn't matter whether you are a football player, an airline pilot, a doctor, a trader. Okay, it's going to take a certain number of hours and a certain number of years for you to become an expert. But one of the ways you can speed up that process is by using constant debriefing of your efforts. Okay, and I see lots of new traders not doing it anywhere near enough, or they do it very haphazard, or they just only do it when they've got good data rather than actually when they've had a bit of a challenging time. And as I said, that every time you relive a trade, you're cementing the learning. So every time you review your trades at the end of the day, and then at the end of the week, and at the end of the month, every time you do that and you relive that trade, okay, you're cementing the learning. Okay, you're just making sure the learning is much more rock solid. What you'll find is that losers see that record keeping as a bit of a waste of time. All right, they sort of see it as it's a bit boring, it's a bit dull, and I'm not gonna deny that it's not always the most exciting thing. Okay, filling in all the paperwork and making sure your trading spreadsheet's up to date, but there's nothing I can say about it. You just got to get it done, all right? Because professionals, they see it as an investment that develops and improves performance, and if you're developing and improving your performance, well then therefore you're more likely to sort of help develop your own P&L of your trading account, which is bumper on your equity curve. That's what we're all in this for. And by keeping good records and reviewing them, it tells you how you're actually doing, right? It tells you how you're actually doing. The numbers don't lie, right? Which can be different from how you think you are doing. Okay, so very often you'll meet traders, when you sort of see them and they ask them how they're doing, they're always saying, "Oh yeah, I'm doing well." Okay, but they don't really, they say that, but actually, it's it's not until they've actually kept the numbers and stuff that you actually realise that. That actually exactly what your position is as a trader, right? And that's key to get that level of clarity and transparency about what you're doing. So, just a few more conclusion points there, just on the couple of things we've touched on today is, what you find is, amateur traders, new traders, they're focusing on the method. Okay. They want to know where do I buy, where do I sell? Whereas professional traders are focusing on their mindset, all right. They're, managing themselves, and good traders treat this overall as a business. All right. So sometimes traders' journey is full of hope, fear, and of greed. All right. But actually it's about, you've got to take your time, you've got to enjoy that journey. It will take your time to become a good trader. But, if you are making sure that you are, following some 10 simple steps, which, we've got a good couple of them to go through, well, then, that will actually help you in your journey. And if you keeping good records and reviewing your trades, as I said, every time you review those trades, okay, you're cementing the learning. It makes your progress just go a little bit faster. Always aim to plan your trade and trade your plan, and focus on how well you execute your tactics. Remember, we're saying there, that grade card. Okay, the grade card about the performance might be the one you might like to see it as a high score, but it's one that you actually don't have that much control over. But you do have control over how you execute your trading tactics, and that's where a good bit of focus has to go to. And when you do that, well, it allows you to take the money to take care of itself, all right. And along with that, you want to be looking to move away from trading to being a profit planner, right? That's what you are. You're a profit planner. You want to, look at the chart and plan for profit, plan for where those profit opportunities are. That's what we're particularly looking for. Keeping good records is a sign of self-awareness and discipline. They're absolutely key for traders, all right? Yeah, and yes, it can be a bit challenging, all right, especially if you're taking a lot of trades, all right? It can be a little bit challenging to keep those records. But the truth of the matter is, you've just got to get it done, all right? And discipline is key to trading success. You'll hear lots of people tell you that, but actually, what will happen is debriefing. Okay, debriefing good records, all right, and review processes is key to improvements in your performance. Okay. And we're only human, so making mistakes is fine, but repeating them is criminal. But if you're constantly reviewing your trades, you'll be constantly learning from them, or you're trying to improve from that. And doing that, records and debriefing, that speed up your progress towards trading success. And that's what I want for you. I want to help you in that journey. And it allows you to adjust your trade plans on the back of hard data, not sort of a simple gut feeling of sticking your finger in the air, right? And as Alexander Elder says, show me good records and I'll show you a good trade. And it's absolutely spot on. Okay, absolutely spot on. I have never met a long-term, consistently sustainable, successful trader who didn't keep good records. I see people who don't keep it, and they might have a little bit of a, let's say, flash in the pan success in their trading. All right, they might have a couple of weeks or a couple of months of doing well, but there is literally, I have in all my years, I've not met any trader, okay, who is not long-term sustainable profitable, who doesn't keep good records. Okay, it really is absolutely crucial, ladies and gentlemen. So here's another great quote from your man, Dr. Elder. So keeping good records is the single most important contribution to your success. If you maintain scrupulous records, review them, and learn from them, your performance will improve. He's absolutely spot on. I can't put that any better myself. Okay, it is absolutely true. As I said, I've not seen a long-term, sustainably successful trader who doesn't do that, who doesn't maintain scrupulous records, view them, and learn from them. Okay, it's I can't hammer it home enough to you all, ladies and gentlemen. If you are doing that in your trading, well done. Give yourself a pat on the back. Make sure just think about how you do it better. If you aren't doing it, okay, then I'll just I'll challenge you to go away and just sort of think to yourself, right, from tomorrow, I'm going to change. I'm going to become more professional in my outlook, right? When I talk about the difference between amateur and professional traders, I'm not necessarily, the definition of amateur and professional is not necessarily an amateur being someone who trades themselves and a professional being someone who trades for a bank. It's more about your mindset, more about your attitude, and about how you embrace and engage with your trading business. All right, professional, you can be a very, very professional trader. Whether you're trading, £200, £2,000, 200 million, pounds, trading account. Okay, as I said, it's about your attitude. Okay, it's about your mindset. It's about how you engage and run your particular business. I've seen what you would call amateur traders, who might actually still be, or were in the old days sort of working for a bank themselves. These days there's not that many of them there. They tend to get found out pretty quickly in the end. But yeah, it is most definitely keep scrupulous records, review them, and learn from them, and that will help your performance improve, ladies and gentlemen. So for the rest of 2019, we've touched upon a lot of money and the risk management, trade management. We're coming into the sort of the 4Ms of myself of it about managing fortunes, recovering from a slump in premium truck performance, and then we'll move on later on in the year to sort of shorter term trading and some advanced trading tactics as well. So there's always plenty for us to cover on the Mastering the 4Ms webinars. Okay, there's lots and lots going on there that we can see and work with and enjoy, and there'll be plenty there to keep you busy. So remember, ladies and gentlemen, you're always looking to sort of how can I manage those 4Ms of trading within my own trading business, the markets, the method, the money, and myself. Just as I say at the end of every session, just give yourself a quick check-in, okay? How well are you doing in those 4Ms of trading at the moment? Give yourself a score out of 10 for each one of the 4Ms, okay? I guarantee when those areas are all in alignment, that's when you tend to be trading at your best. Or if you're having a bit of a challenge, well then work out which one of those 4Ms is it that's actually causing that challenge, and you're in you have a little bit of a bit more of a narrow focus on what you need to do to sort of overcome that particular obstacle. As always, ladies and gentlemen, if you have any questions or you afterwards, or you're watching this on demand, okay, then by all means feel free to get in touch with your account representative. You can call them on the London number there, 020-7726-4003, or email them at hello@admiralmarkets.com. You can watch this session. It'll be up in the next probably 24 hours, okay, and watch all the other previous sessions on the Admiral Markets youtube.com/Admiral Markets channel, or on facebook.com/Admiral Markets global page. I hope you found that useful. I think I've got like about 2-3 minutes left just to finish up. So as always, if there is always a little bit of time, I'll have a quick look at just one or two charts. All right. If you want to have a look more in depth at trading ideas, then Tuesday 10 a.m. London time, I always run the real time daily trading ideas. So by all means, drop in there, and that's where actually what you'll find is, when I go through the sort of real-time daily trading ideas session on the Tuesday morning, I'm just simply using the sort of the steps and the tools that we have discussed through these sessions over the last 4 or 5 months. As I said, I've got a moment or two left, so just bear with me a moment. Let's see if we can let's have a little quick look at charts there. So, excuse me. This is it's a profile for it's a MetaTrader MetaTrader 4. Okay, and this is just a profile I have set up for indices, and hopefully you can probably just see that there just for a couple of minutes. Is that it just shows you here how we are getting very much to the it's kind of almost like a one world index, and what I mean by that is what I have here. Here's the top left. This is the Dow Jones on the Dow Jones 30 on the daily, the S&P 500 on the daily, the Nasdaq on the daily, the ASX, okay, the Australian index on the daily. Bottom left here is this is the Nikkei, okay, Nikkei here on the daily. Then I have the China, okay, China A50 there. I have the DAX, okay, and then we have the FTSE. And hopefully, for the most part, you can see that actually they pretty much follow. This is why whatever those American indexes are doing, the rest of the world, for the most part, tends to follow in that trend. Now, not surprisingly, the sort of the FTSE and the DAX have been a little bit not as sort of, let's say, as closely nicked into it as much as you'd think, but that's because a lot of the Brexit conversations are going on at the moment. But hopefully, you can just see there that actually, where those American indices are going, that's where we want to sort of keep an eye, because they are leading the world. And I talked about this on the real-time daily trading ideas last week. Is that you can see on the Dow, well, it's there we go. You can see that it's above, it's got above the daily 200, and it's racing ahead. We saw the S&P 500 there, okay, at the end of last week. It got up to the 200, and actually we can see that on Friday it pushed through it. The Nasdaq, we can see, is just up. The Nasdaq's finding the daily 200 just a little bit challenging there at the moment. Okay, so just keeping an eye to see how that develops there. The ASX, it got above that daily 200, is holding, and it's just grinding its way. Yeah, it's grinding its way up there. The Nikkei, okay, we've still got a fair bit way to go. Okay, we've still got a fair way to go to the daily 200. The China, you can see the China's gone through it. Okay, went through it, and it's, you know, what, resistance became support. Okay, came back here, put in a pin bar, and then it moved its way up. The DAX, okay, the DAX has been rather interesting in that sense, and you can see there that, you know, we're actually still a long way from the daily 200 there, and the FTSE is a little bit the same in the sense that here we go, it's just got to get its way up there, up to the daily 200 there. So as I said, you know, the Dow is leading the way at the moment. Okay, the Dow is leading the way. Okay, it's gone through the other side of 200 and strongly moved up. That's what we'll keep an eye on. But just see how the Nasdaq, okay, operates there, and how one or two of the other indices, you know, will they just literally just track their way up, and see how that provides trading ideas from the sort of correlation of the indices markets. So there you go, ladies and gentlemen. We'll just finish up there. Thank you for joining me. As always, as I said, if you want to join me tomorrow for the real-time daily trading ideas at 10 a.m., you'd be very welcome to join us. If not, then I wish you the best of success in your own trading this week, and I look forward to seeing you next Monday, 4 o'clock, for the next instalment of the Mastering the sort of 4Ms of Trading webinars. Thanks very much, guys and girls. So Rolf says, thanks, Paul. Again, a really helpful webinar. Thanks, Rolf. I appreciate that. Thanks for joining us. And Phil says, thank you, Paul. You're very welcome, Phil. It's always nice to have you here joining us. Borislava says, thank you. Yeah, thanks, Borislava. I hope you have a great day. Same for yourself, Christine. Have a great week. Okay. Have a great trading week. Hope you found that useful. Okay. And hope it'll make you better traders over the coming days, weeks, months, and years. And I wish you the best of success in your own trading this week, ladies and gentlemen. Thanks very much.